Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, if you look at the market yesterday, it was totally, volatile. Of course, we don't have to talk about it. It has become a common thing as on today, and the market was looking like it was falling the initial first morning, but then from there it started rising up, and from there a continuous fall. Multiple times 17,700 was supported, but then it was broken and finally closed below 17,500, 700, sorry, 18,700. So the market just closed below 18,700. And the interesting thing was, in spite of all this selling off, yesterday FIAs were net buyers to the tune of 3,000 plus crores, and DIS have just sold slightly less than 300 crores. So net investment of almost 2,700 crores by the institutionals, and still the market fell. So this actually shows the power of retailers. So the market was all, in fact, it was so close to 18,800 yesterday. It felt like just another 70 points, and sorry, just another 70 points, and Nifty would be touching its all-time high. But from there, in the big correction, majorly there was selling off seen in banking sector. Naturally, banking sector, what is happening is, see, the mutual funds, a lot of mutual funds hold lot amount of shares in HDFC and HDFC Bank. Now, as a merger is taking place, and mutual funds have a rule that they cannot have more than 10% of the capital invested into one stock. So what happens is, when this merger happens, that would be more than 10%, and because of which they have to cut down their positions in HDFC. So that HDFC was actually leading the way down. We could also look at Axis Bank, which had just touched its 52-week low, coming down, and some profit booking seen there. And apart from that, ICICI Bank, Kotak Bank, and also SBI was really weak yesterday. So overall, it was a bearish day for the banks. But then some support came in from Reliance. Reliance was kind of stable, not big fall. In fact, Reliance is also kind of trying to break out. But then apart from that, if you look at the major power, actually came from ITC. So ITC was again a boon. So in fact, this has happened to me multiple times. I have ITC, a good holding in my account, and every time the markets have fallen, ITC has risen and supported my portfolio. So there's something similar yesterday. Yesterday, ITC was the top gainer in terms of the weightage of Nifty yesterday. So that way, markets were of course volatile. But yesterday's fall cannot be attributed to bearishness in the market, because yesterday was expiry, and weekly expiry tends to have such volatile movements, majorly because of this huge retail participation in options and futures trading, that is derivatives trading in India right now. So right now, let us see how the markets are going to behave today. And today being the weekend, last day of the week, definitely markets again can have a different view at the end of day. But then what is important is how the market turns up by Monday. So we'll discuss more about what happened in this week and what could be expected next week in the Market Pulse video. That would come on Sunday, every Sunday at 7 p.m. sharp on the same channel. So that is something that we can discuss there. But something interesting that I need to discuss is about what happened in the US market. So after Indian markets closed, one more thing we forgot is European markets. In European market, yesterday, in spite of day for yesterday, US Federal Reserve deciding to pause the rate hike. Yesterday, the European, monetary policy central bank has actually increased interest rates by 0.25%. That, of course, led to some negativity in the European markets. But then probably that could also be spilled over to Indian market for yesterday's fall. But however, I think it was majorly the banks which is bearish, which actually held it. So may not be just that. So now, if you look at US market was in a totally contradictory direction. So what happened? Day for yesterday, US Federal Reserve told that they are pausing for now and they are planning to have 2 more rate hikes. So that kind of dampened. But then overall, investors probably are thinking that now that interest rate hikes have at least come to an end, or at least coming to an end soon, it is good to start buying, and that is what led to a major rally in every indices in US. Dow Jones, S&P 500 and Nasdaq all up more than 1% yesterday and closed in a big green. So naturally, when the US markets close in green, Indian SGX Nifty also tends to show some positivity. So we might see a small gap up opening. But however, I don't see a major gap up expected, because SGX Nifty is already trading flat after a small rise yesterday night. So that's kind of expecting the market to open not with a big gap up or not a gap down. So that way the markets can be more stable. But however, it's very important to see if these gap up can be sustained. Will 18600 be broken? 18600 or on the downside, if it is broken, then probably it could lead some more bearishness. But otherwise, if the market consolidates around this range, there are high chances that the market can actually rally up. But however, all-time high is now kind of slightly more delayed. So that's something that we need to watch out for. However, it could happen at any point of time, or in this next week or the next week. We never know. We don't want to predict, because we don't predict the market. We just anticipate the market and go as per that, as per the flow of market, and that way we should be kind of okay with it. By the way, in trading that we do at MPA Family, we again closed this week with almost a decent 1% profit. That is a decent return, a really decent return for what we do, without any stress, and kind of we just enjoy doing it. So that is just an update, though we are not promoting it as such. But yes, it's very important that trading is something that requires a lot of discipline and consistency. So basically, the discipline, consistency, and being in the right mindset. So these are few skills required for a trader. Otherwise, it's not easy trading. So that's exactly why 90% traders, 90 or more than 95% traders actually fail in the market. So I don't recommend everybody to be kind of trading. So of course, the investing is the best way of making easy, good returns, and then naturally kind of stay effective in whatever job you do. So that's something that we always promote at MPI Invest. So if you want to actually learn more about it, understand more about it, you could be part of our community. It's completely free of cost. All you need to do is go to the website mpainvest.com and schedule a meeting with our team, and we will let you know how we can help you and also help you grow financially. So that's it for now. This is Srikanth Rajan signing off until we catch up on the Market Pulse on Sunday. But before we leave, of course, like, share, and subscribe. Right? That's what they say, right, in YouTube. So do like the video if you love it, and do share with your friends and relatives to help them learn and invest better. And of course, subscribe if you have still not subscribed. This is Srikanth Rajan signing off. Have a great weekend. See you on Sunday.